TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials up 19. You get the Nasdaq up 16. S&Ps are up 7. Gold contracts trading down $12.10 at $1,314. We have silver up 14 cents at $18.92 an ounce. Platinum's down $9 at $1,028 an ounce. We get light sweet crude flat at $44.06. Bonds, the 10-year note down 8 ticks, 130.06. 30-year bond off 30 ticks, 164.30. Notes and bonds, folks, had a bounce yesterday, light volume. They look like they're going to do a large ABC structure on the way down. They've already come back to the June 24th breakout area. King dollar up 178 ticks, trading at 95.50. We have the euro at $1.12, and the yen is trading at 102.62. We go over and we take a look at the S&Ps. This is what we have happening here. You had the SPY yesterday, fell on price. You had lighter volume. Bottom line looks like it's setting up an ABC structure on the way down. The B point on this ABC structure is $212.31. It looks like this thing's going to make a run somewhere into the 209 area, 208 area. Right now we're 213.25. NDX 100. Now the NDX 100 is the strongest index when you take a look at whether it's the Dow, the Nasdaq, the small caps, or the SPY. That being said, guess what? That failed also on price. The Qs got up to a price point yesterday of $116.47. Gave it up on price. Only had 28 million shares traded. Today we made it a price point of $116.37. I expect you're going to see the same thing. This also looks like an ABC structure on the way down. The B point on this is 113.63. Gold contract. What do we have with gold? And this is really dangerous here. So check it out. Gold contract has had price spread today from 1332, and we're at 1313. The low right now is 1313. You've already done 118,000 contracts. This is going after a lower swing point where we had 180,000. That swing point is 1305. Number one, I expect you're going to make it down there. More than likely, you're going to see it break it. This wants to get down into the benchmark, and the benchmark in this contract, as is in the indices, and the bonds already hit it, is 1259. Bonds. Let's go into the notes first. We take a look at the notes. This is what we have with the notes. The 10-year note right now is trading at 130.06. We made it to 130.27 today. Giving it up, setting up an ABC structure on the way down. It's not a monster one. Bottom line, though, it'll bring it down somewhere into the 129 area. Right now, you're at 130.06. We take a look at the 30-year. But the 30-year bond right now is trading at $166.15. That continues lower, and it continues lower with volume. It looks to me that the market has raised short-term and long-term rates, regardless of what the Fed wants to do. You've got to remember something. The Fed controls the short-term rate. That's all they do. Bottom line, none of us get the short-term rate because that's bank to bank. But guess what? The market's dictating right now that rates are going higher. We'll see how much higher they're going. Right now, the 30-year is trading at 164.29. It looks like this is going to make its way down to the 161 area. King dollar. What do we have with King dollar? King dollar continues to want higher price. And this is pretty deviant because King dollar really hasn't moved that much. I expect you're going to see it move a lot more today. It rejected lower price at 95. You're at 95.41. King dollar's on its way up to this 97.61 area. This 10 a.m. update is brought to you each and every day by Everbank. For more information on the products they offer, you can give them a call at 855-750-4051. That's 855-750-4051, or visit everbank.com/TFNN. Have a great day. Have a safe day. Look forward to speaking to you right back here tomorrow morning, 10 o'clock.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe focused commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.